Welcome back to Golden Shadow. Today we're asking a big question. Is China's real estate crisis just a local problem or a global ticking time bomb? As the world's second-largest economy stumbles, the aftershocks may ripple far beyond Beijing and Shanghai. How big is China's property crisis? China's real estate sector was once its economic engine, accounting for nearly 30% of GDP. But now it's collapsing under its own weight. Evergrande, once China's largest property developer, defaulted on over $300 billion in liabilities. Thousands of construction projects halted. Millions of homeowners stuck with unfinished apartments. The market lost trust, and the government's response: mixed signals and delayed bailouts. Major Chinese developers in trouble. 1. Evergrande Group. Debt over $300 billion, one of the world's most indebted companies. Crisis point. Defaulted in 2021, triggering global fears of contagion. Latest. Filed for Chapter 15. Bankruptcy protection in the US, 2023. 2. Country Garden. Once China's largest developer by sales. Missed bond payments in 2023, narrowly avoiding default. Deeply exposed to lower-tier cities where demand collapsed. Defaulted officially in late 2023. 3. Sunac China. Debt. Estimated over $40 billion. Filed for Chapter 15. Bankruptcy in the US in 2023. Defaulted in 2022 and is undergoing major restructuring. 4. Kaiser Group. The first Chinese developer to default after Evergrande in 2021. Over $11 billion in offshore debt. Heavy reliance on offshore bonds worsened its collapse. 5. Shimao Group. Defaulted in 2022 despite being considered more stable earlier. Shocked investors, as it was a top-tier government-favored developer. Missed interest payments on offshore bonds. 6. Fantasia Holdings. Missed a $206 million bond payment in 2021 without warning. Rapid fall from grace. Default raised transparency concerns. 7. China. Aoyuan. Defaulted on offshore bonds in 2021. Known for high leverage and aggressive growth strategy. Restructuring ongoing with many projects stalled. Why it matters to the global economy. 1. Commodity demand collapse. China's property sector consumed half the world's steel and cement. As construction slows, global demand for iron ore, copper and energy contracts. This hits exporters from Australia, Brazil and Africa hard. 2. Financial contagion. Risk. Chinese banks and shadow lenders are deeply exposed. If defaults escalate, credit markets could freeze, sparking capital flight from emerging markets. 3. Deflation. Exported globally. China is now in deflation, lowering prices to stimulate demand. But that means cheaper exports, which can hurt foreign competitors and create global pricing pressure. What's behind the collapse? This crisis wasn't a surprise. It was years in the making. Overbuilding and ghost cities. Developers built millions of homes, not for people to live in, but for speculation. Whole cities, like Ordos and parts of Henan, stood empty. The 3 red lines policy. In 2020, Beijing tried to control debt by introducing debt-to-asset limits. The move triggered a liquidity crunch. Developers could no longer borrow to finish projects. No consumer confidence. With jobs uncertain and apartments unfinished, buyers simply stopped paying mortgages, a rare protest in China. Could this become a global crisis? On the surface, this looks like a domestic issue. But China's economy powers global supply chains, trade, and financial flows. If the crisis deepens, here's what could follow. 1. Global GDP may slow as China buys less from trading partners. 2. Foreign investors could flee risky assets and emerging markets. 3. Multinational companies may revise profit forecasts. The biggest risk: a credit freeze in Asia or another black swan shock tied to China's slowdown. Who might benefit and who gets hurt? Not all consequences are negative. Winners may include commodity buyers who benefit from falling prices, India, Indonesia. Exporters who fill the gap left by Chinese firms, Vietnam, Mexico. Global investors rotating into safer assets, US Treasuries, gold. Losers include commodity exporters like Australia and Brazil, global banks with exposure to Chinese debt, luxury brands who rely on Chinese consumers. China's property collapse isn't just a domestic tragedy. It's a global tremor, one that could shape trade, inflation, and financial markets for years. Whether you're an investor or policymaker, this is a story you can't ignore. This is Golden Shadow, where every boom has a shadow and every crisis has a signal. If you found this helpful, hit like, subscribe, and let us know. Do you think the world is ready for a post-China era?